I'll be covering the data sets for this week, the earnings, and going over the SPY technical analysis slash some other technical analysis through other symbols. Just a reminder, I will be streaming Monday, Tuesday, Thursday, and Friday from 9:15 Eastern Standard Time to about 11:12, give or take. So with that said, let's go ahead and get into the data sets. And going over this week's data, we do have some fairly important data sets. Monday, it's mainly the ISM manufacturing data. Not too concerned about that. We have the Atlanta Fed GDP now. Again, I'm not too concerned about that either. On Tuesday, we do have the JOLTS job openings at 10 a.m. So I am interested to see what those numbers provide for us. For Wednesday, we do have some fairly important data sets. We have the ADP non-farm employment change for May, so it's not just the weekly, it's the entire month. The forecast does have that pegged a little higher than the previous, which overall for the job market, that would be a good thing. However, this is still down roughly about 140,000 jobs for the month. Usually this should be anywhere from 200 to 300,000 jobs being created each month. So this is still heavily down. Now, I'm not too concerned about the ISM non-manufacturing uh, data. I mean, the non-manufacturing employment is important, but the rest of that, not too worried about. Now, at 2 p.m., we do have the beige book, which I always like to read the beige book, whether it moves the market or not. Um, it's always important to kind of understand what's going on the ground, and that's what the beige book will provide. The beige book is when the Fed talks to all the different companies and businesses and their local districts and kind of gets a feel for what's going on with the real economy. Now for Thursday, not too much data going on. We have the initial jobless claims. We do have the non-farm productivity and the unit labor costs, which that is very important for the overall labor market. They'll be telling us, if they're having to pay more for employment, if and then how the non-farm productivity is. So that's going to be very crucial. Um, it could move the market, but I think the market is very focused on the Iranian conflict right now. Now for Friday, we have very, very, very big data sets. So we have the hourly earnings for May, we have the non-farm payrolls for May, unemployment rate, private non-farm payrolls, average hourly earnings year over year, the labor participation rate, the overall unemployment rate. So this is basing off of people exiting, entering, wanting to enter, things like that. So even though it's considered less of a reading than the overall, primary unemployment rate, it's still a very important one to look at. And we also have the consumer credit, but that's kind of after the market's already over for the day. So overall, we do have an important week. Some of these data sets will be moving the yields and the overall market, especially if we start getting some hotter data within the unemployment rate, within, um, excuse me, I mean weaker data. So saying the unemployment rate's going down, things like that. So if we get signals like that, that can pull down the market pretty hard. If we see the unemployment rate move upward, then that can actually rally the market. And I know this seems a little backwards, but the unemployment rate moving upward would help benefit the yields, or the US Treasury yields very, very greatly. So overall, I have no real consensus of whether we're going to see the unemployment rate pick up or not. I do believe that overall the jobless claims and everything have been slowly getting less and less and less, which could mean either two things. Either one, people are finding jobs, which we haven't seen evidence of, or two, people are just exiting the workforce entirely. So this week's data, very, very important. Now, there's not a whole lot to cover with the earnings this week, and I do apologize that the screen looks a little shrunk together. However, we have Palo Alto on Tuesday afternoon. Not too worried about that, but that is a major tech company. We also have crowd control on Wednesday afternoon with Broadcom. That's going to be, two very, very big important companies, especially Broadcom. Broadcom's, again, one of the leading semiconductor companies. So it's a very, very big deal. This has the ability to absolutely rally the market or dump the market based on the overall guidance. Now for Thursday, really nothing major. There's what Rubric, I haven't traded that in forever. Um, Lululemon, a lot of people in the Discord do trade Lulu, but I haven't done that in a while. So overall, I'm not too interested in the earnings this week, but I do believe Broadcom can definitely move the market quite a bit. So that's the one to pay attention to out of anything. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. And getting into the technical analysis, we will try to keep this fairly short tonight, but we're going to start with the weekly time frame. Okay. Now, there's a couple things to look at on the weekly time frame before we even pull up the moving averages. Just looking at the Bollinger Bands and the OBV, which is basically my old ADL indicator. I just haven't been able to add the ADL ever since I had to re-download Webull on my computer. So until that gets reincorporated, I will be using the OBV. Regardless, we've been seeing the OBV/ADL picking up very, very heavily over the last few weeks. And again, this is the weekly time frame. So while I say last few weeks, this is really a culmination of basically about 2 to 3 months. With that said, we had a very, very specific move within the SPY on the weekly time frame. We see how there's a really, really quality upper Bollinger push here. We pushed into the upper Bollinger week 1. During that week 1, I stated that week 2 should be bringing us a higher high, and from that higher high, we should see a downward consolidation. That downward consolidation basically did a 5-mile retest, and from that 5-mile retest, it looks like we're bouncing again. Now, on the weekly time frame, if we tag this week 1 upper Bollinger again, then that's going to, very, very likely lead into a week 2 higher high. So that means that the bullish price action right now is still extremely, extremely valid, and I would not be trying to short this just yet. With that said, on the daily time frame, we see a little bit of that same structure. We see how it was getting ready to push into the upper Bollinger, had a rejection, tested the 5-mile, tested the 10-mile, had a bounce off the 10-mile, and had a bounce off the 5-mile. And what that really leaves is this upper Bollinger. Now, we've been getting, rejections from these upper Bollinger moves for quite a while now, many, many months now, where we pull very close, it rejects down, pull very close, rejects down. Kind of expecting the same thing here, but with that expectation, or, expectation, we should still anticipate that, all of our supports have been retested. Technically, we can push up to the upper Bollinger. Now, the upper Bollinger is currently at the 760. It'll probably be around 762 by open, which means that if we're going to secure that level, we have to push above that level and hold it for the close. We can't just tag the level and pull back down. We have to push into the upper Bollinger, hold that level, because from the upper Bollinger day 1, we would be anticipating an upper Bollinger day 2. Now, with the 5-mile, it is very due for a retest. It has not been retested since May 26th, which wasn't too long ago, but again, the 5-mile should be retested basically every 5 sessions. So either we're going to come down and have that 5-mile retest. Currently, the 5-mile is at the 750, 155. It'll probably be around the 754, maybe high 753 by Monday. But that will continue pulling upward if the market continues to pull upward. Now, one other thing I'm going to discuss really quick is that with these upper Bollinger moves between the 5 mile and the upper Bollinger, it looks extremely bullish because it looks like, okay, we're going to bounce off the 5 mile, head to the upper Bollinger. Well, that has not been the case, and it actually creates one of the bearish conditions for selling. So once you start rejecting that upper Bollinger, start pushing off that 5 mile, it's basically showing a major tapering in the buying because the buying is not willing to push above that upper Bollinger. So we will see this week if we have the type of news, especially if there's good news with the Iranian conflict, then potentially we could be having a very quality upper Bollinger move. Now, you don't short this until the upper Bollinger move day 2. Okay, so if we secure day 1 and we push basically all-time highs, you need to wait for the day 2. And the day 2 will give you that proper short, basically all the way down very likely to this 20 mile. Now, we talked about this on semiconductors and on tech, but only semiconductors were the ones that tested their 20 mile. For the SPY and tech, we have not tested this level since April 9th, so we're far beyond due for a quality 20 mile retest. So as bullish as the market looks right now, understand that that's a very important level, and the dealers will look to retest that level fairly soon. Kind of seeing the same thing out semiconductors. They pushed the day 1 upper Bollinger, day 2 secured that higher high, had a downward consolidation, bounced from that 5 mile, and now very likely heading to the upper Bollinger again. And same with tech. Tech is sitting a lot closer to how the technicals of SPY is right now, where we got close to that 20 mile, but we had a bounce upward to the upside. And from that bounce to the upside, we've retested the 5 mile and very likely looking to push into the upper Bollinger. Currently, the overnight price is at 741.61. The upper Bollinger is at 744. It'll very likely be around the 746, or excuse me, it's at 745.89. Um, it'll very likely be around that 747 range by the time open happens tomorrow. Now, I do want to very quickly go over Bitcoin, and I want to very quickly go over Nvidia because they're going to kind of tell a lot about what's going on with the market currently. So, getting to Nvidia here, while we are having a major gap up on the daily time frame here, and we're going to hide the moving averages, show the drawings, is that this bullish structure has not been able to push out. And because of that, we're starting to create bearish structure. If this bearish structure continues, then we will pull down towards this very heavy consolidation range. And from that consolidation range, very likely build an additional head and shoulders to continue pushing downward. However, if we do bounce upward, look for this cup to close all the way to the 236.54. And from that range, that would invalidate a lot of this previous bearish structure. And that's kind of a very big thing that many of us are looking for right now because throughout the last week, while Nvidia did have a couple very good sessions, it's just been pretty much losing value, losing value, losing value, while the rest of the market has been absolutely flying. So with this being, essentially the top company in the world right now, or at least the United States right now, then this should be suggesting that potentially we could be entering into a sell-off fairly soon. Now, the other one I wanted to show is Bitcoin, because Bitcoin has been trading, and I'm going to show the weekly time frame and hide the Bollingers. But we were within this very strong buying channel. However, we're now within this very strong selling channel. And from that selling channel, we have a head and shoulders, a inverse cup and handle, and a lot of bearish structure starting to build. And especially if we go to the daily time frame, we can see there's a head and shoulders, very likely wanting to pull into this liquidity range, build this right shoulder, and really start giving us some new lows on Bitcoin. Now, if the Iranian conflict changes anytime soon, this selling can reverse very quickly because Bitcoin and precious metals tend to trade very close together, and precious metals have been absolutely beaten down from, this conflict so far. Add to the overall positions, um, it's still very difficult because with oil being, you know, very, very volatile and very elevated right now, that's enough to continue pushing metals down well below some of these major support ranges, but we do see the market really attempting to try to buy the support every time we get good news. So that's looking very, very solid for the market. Now for USO, which is United States oil, we're starting to see a breakdown. Okay, we're starting to see a breakdown in the structure, but it is close to the lower Bollinger. Technically, it did have a lower Bollinger move, which does mean that we can start seeing some buying to the upside. Now, again, oil's going to be entirely based off of, you know, what's going on with the actual conflict, because if we get a peace deal or something, which obviously has been promised to us for months now, but if we get a peace deal or anything else, then that's going to absolutely change the direction on where USO is going. It'll start tanking into the ground, and that'll be the story of that. Apologize for yawning. Now, going over TLT. TLT has been in a very, very hard breakdown structure. Um, and we've been watching TLT for years. We've been waiting for a lot of these upside cups to break out, but it just continues building a head and shoulder, pulling down, build head and shoulders, pulls down, rinse, repeat, rinse, repeat. So a lot of my TLT positions right now I currently have in HIG-W, which is, a branch off of the HIG. I don't have it on my main watch list. But HIG-W follows the corporate bonds, and if we're seeing equity strength, then we're going to be seeing, continued strength within the corporate bonds. And because of that, um, that means that this is going to be providing a much higher dividend. As you can see, this dividend is basically anywhere from 18 cents to 50 cents a month, especially when the market's doing very well. When the market's doing a little more poorly, it's going to provide less of a dividend. However, I've been putting all of my treasury-based shares into HIG-W, because again, I want to basically profit off of the market going parabolic right now. Um, Treasuries are still in a position to get beat down, but we will be swapping back to TLT and TLTW. Um, I would like to say soon here, but it really depends on the oil volatility and overall what's happening with the yields. So the expectation again out of this week, upper Bollinger push into downward consolidation. If we don't see that occur, then potentially we can break down towards that 20 mile. Okay, but the buying looks very strong right now, so I would not hesitate to say that, the upper Bollinger push is going to occur. Alright, and that's going to be the technical analysis, everybody. Very quick, very easy tonight. Um, Again, I will be live tomorrow at 9:15 a.m., and I look forward to seeing you all there. Just a couple of reminders. We did change some things with the Discord, so you can join for free now, and with that free join, you get access to the Unusual Whales bot, you get access to the chat with, over 800 something traders in it, and you get access to being able to talk to me one-on-one sometimes, and being able to see what some of our other very, very experienced traders are taking within their positions and everything. So I highly suggest joining. It's free. If you want the class aspect of it, again, following my ad. It's $29.99 a month. It does come with a 7-day free trial, so you could always try it out, see if you like it. If you don't, I'm not going to feel bad if you cancel, because again, my whole goal with this is to teach people how to trade, whether it's long-term buys, short-term 0 DT trades, doesn't really matter. I'm here to help people learn, and that's what that $29.99 a month will help cover. So, with that said, I hope everyone has a great evening, great day, whatever time you're listening to this. I hope you're having a good one, and I will see you all live in the stream tomorrow. Take care, everybody.